Hello everyone, and welcome to Puritas Springs Software's YouTube channel. I'm Ernie Zore, joined as always by my good friend and colleague, Larry Hausel. We appreciate you taking a few minutes out of your day to join us.
That's right. And thanks, Ernie. Today we're going to be addressing one of the most common and most misunderstood areas of estate and tax planning, the federal gift tax.
That's right. We've gathered 20 of the most frequently asked questions that we get from attorneys, accountants, and users alike. Some basic things and some advanced. However, all of them are interesting and they're all helpful to be familiar with.
And don't worry, we're going to keep it brief, clear, and practical. We know people have a short attention span.
That's right. Hey, Larry, my research shows that the average YouTube viewer only watches a video for about 2 or 3 minutes.
And I've read even that the attention span is less than 23 seconds, so hopefully they're still listening to us.
I'm sorry, would you say I wasn't listening, Larry?
That's a good one.
Yeah, do you like that? Do you like that? I stole it from Larry. I should take the credit for that. Anyway, okay. And so where are we at here? We're going to, okay.
Get started, right?
Yep, then let's get started. These are quick questions with short answers. For deeper dives, check our earlier gift tax videos, and we'll put the links somewhere in the video here so that you can check them out if you want to.
Yeah, and I'll definitely put them down in the comments, so all you'll have to do is just, or in the description, the video description, all you'll have to do is just click on it, and it'll take you right to it. Split gifts, some 2004 and 2004 gift tax videos, and we're going to be making more videos all throughout the tax seasons.
So, well, we know that gift tax returns can be confusing. So here's our rapid fire breakdown on Form 709.
All right, well, let's get started. Do I need to file a gift tax return if I don't owe any tax?
Well, Larry, you just read my line.
I sure did, didn't I? I saw my name.
Yeah, there we go. Your name's underneath it.
Mm-hmm.
This is where you say,
as a matter of fact, you do have to file a Form 709 if you made gifts if they're over the annual exclusion, even if you owe no tax, because you want to keep track of that lifetime exception. So, Ernie, now I'll take the opportunity to ask you, who must file the 709?
And the answer is, anyone who gives more than the annual exclusion to one person, makes a future interest gift, or elects to split gifts with the spouse. Question number 3, can spouses file a joint gift tax return?
No. Unlike a normal return, you cannot file a joint tax return. We get this question a lot. So let's just clear it up by saying each spouse must... Jeez.
It's easy for you to say, Larry.
Yeah, that's the quote, isn't it? Each spouse must file their own Form 709, even when they agree to split the gifts. All right, so are there any gifts that don't have to be reported?
There's a couple of them that I know of. Gifts under the annual exclusion, which is partly what I said before. Direct payments to schools for tuition. Direct payments to medical providers. And gifts to U.S. citizen spouses. What's the annual exclusion, Larry?
Great question, Ernie. That's what this is all about, really. In 2025, it's $19,000 per recipient. So that goes up every year. It's adjusted by inflation. And you can give up to that amount to as many people as you want, and you don't have to file a return. So if you had a son or daughter, and you could give each one of them $19,000, and you wouldn't have to file a return. But if you gave them $19,050, then you're into return territory.
That's correct.
So let's talk about that $50, and that'll go against the lifetime exemption.
Right.
What is the lifetime exemption?
It's about $13.99 million in 2025. That's the total you can give away tax-free during your lifetime. Also, note that amounts above the exclusion reduce this lifetime total. Therefore, if you gave your child $20,000 in 2025, you would not owe any tax, but $1,000, the amount above $19,000, would be applied against your lifetime exemption. Okay, question number 7. What counts as a gift?
Well, when we're talking about gifts, we're talking about any transfer for less than full value. So other than just giving somebody money, cash, you could forgive a loan, you could add someone to a deed, or you could transfer stock. Now a question that comes up quite often, Ernie, can you file Form 709 electronically?
And the answer is, and I was surprised when I forgot this answer, no, not yet. Most people must print and mail the paper to the IRS, even if software prepares it.
Which we do, and we make it super easy to do just that.
That's correct.
All right. Go
All
ahead.
right, question number 9. What's gift splitting and how does it work?
Gift splitting is another very common question, and it has to do with married couples because they can split a gift so half comes from each spouse. And that doubles your $19,000 exclusion, doesn't it, if you're giving it to someone to $38,000 per person in 2025.
Yeah, that's right. An example would be John gives his daughter $50,000. Alone, he's over the limit. But if he and Maria elect to split, each reports $25,000 and only $6,000 of each spouse's exclusion is used. That's $25,000 less $19,000. Both spouses, as Larry, I think you already said this, both spouses must file a Form 709, but still no taxes due, just to be clear. Now, who wrote this up? Why is the name Maria in there?
The West Side Story, I assume.
No, you know what I'm thinking of? Maria is always the secretary that isn't that the boss cheat with? Well, do you remember? We'll take a letter, Maria.
Yeah.
Okay.
What's that from?
Take a letter.
And then there's the other one. I don't ask me that. There's the other one, Marie. And they go way the hell high.
Yes.
Yeah. So anyway. That's gonna all have to be edited out of this video.
Oh, well, that's
thanks
a shame.
to me.
That's a shame.
But so I'm going to go on then. Now that I've done that, I'm going to go on to question number 10, which is how do I report 529 plan superfunding?
You got that Maria song stuck in my head.
Yeah,
Maria.
Yeah, that was a great song actually.
You can contribute back to the 520. Okay, so we're talking about the 529, and we're talking about that you can contribute up to 5 years worth of exclusions at once. So you've got your $19,000, $90,000 in 2024 was the superfunding limit, and elect to spread it over 5 years. And you can do that on Form 709, right?
Yes.
Okay.
And just for clarification purposes, 529 refers to a section in the tax code, I believe. It's a tax-advantaged savings plan for educational purposes. The money grows tax-free, and withdrawals are also tax-free if they're used for qualified education costs.
That's right. So there's two main types. These are college saving plans, invested as mutual funds, and prepaid tuition plans. So those are colleges that allow you to lock in a certain rate and pay now, kind of get around that inflation.
The benefits include tax-free growth, flexible use nationwide, and high contribution limits. But non-qualified withdrawals are taxed and penalized, so use them wisely. Question 11. Do gifts in trust need to be reported?
Yes, if the trust is irrevocable. The annual exclusion applies only if beneficiaries have Crummey powers.
And just to clarify, a Crummey power lets the beneficiary withdraw from the trust for a short period, say 30 days. The point of it is that it makes the gift a present interest, and that makes it eligible for the exclusion.
Right, so you can grab that yearly exclusion. And I just want to thank Mr. Crummey for having such a great name and giving that power such a funny name, because it's not a Crummey power, it's actually a good power.
There you go.
But at any rate, look up that tax case if you're interested in Mr. Crummey and all he's done for us. But without the Crummey powers, the IRS sees the gift as a future interest and it doesn't qualify.
Example, you contribute $50,000 to a trust for your daughter. With the Crummey provision, $19,000 of it qualifies for the exclusion, and your lifetime exemption is only reduced by $31,000, whereas it would have been reduced by $50,000 had not the Crummey provision been in there.
That's right, because you gave her the right to withdraw that for 30 days.
There you go. And 30 days is just what we're using as an example. I think that the actual case speaks about the time period in a different way.
Okay. And remember, too, that this must be a real improvable thing. The IRS doesn't buy imaginary after the fact, like, oh, yeah, imaginary crummies, if you will.
Yeah.
And I'd like to stay with that crummy joke, but I'll let us move on.
Okay.
So what is a future interest gift, Ernie?
It's a gift the recipient can't use right away, like a trust, for example, that doesn't pay out until the person's 30 years old. No exclusion is allowed for that type of a gift. Question number 13. Do I have to report gifts to a non-U.S. citizen spouse?
Yes, you do. If they exceed $190,000, so not $19,000, but $190,000 in 2025, that's the special limit for non-citizen spouses. So, Ernie, how do gifts affect estate tax later?
Taxable gifts reduce your remaining lifetime exemption. When you die, those prior gifts are added back to determine estate tax.
Okay, so let's give an example. If Linda used $1 million, should be Maria, but we'll stay with Linda.
Yeah, right.
Of her lifetime exemption on gifts years ago, her estate only has $12.61 million left under a $13.99 million limit. This pertains to the estate's gift tax return. It goes to show that the gift tax, the 709, becomes a record-keeping tool for that. Next question, number 15, can I correct a mistake on a prior Form 709?
Sure. File a corrected return marked amended with an explanation. There's no official Form 709X yet, like there is for the Form 1040 and a couple other forms. Though the IRS has hinted that they're going to release one, but they haven't yet. So in case I didn't say that correctly or clearly anyway, what you would do is you would make up a regular 709 just like you filed the first time. But across the top, very conspicuously, you would mark it amended.
Okay. So, how do I report gifts of property or stock?
The way you do it is you use the fair market value on the date of the gift, and also it's wise to attach an appraisal or explanation if it's necessary.
Makes sense.
Of course, if it's necessary, it wouldn't be wise. Okay, never mind. I don't like the way I said that, but I think our viewers understand what I meant to say.
If you're wise, you'll do necessary things.
Yeah, attach an appraisal or explanation if necessary. And we're not going to tell you what necessary is, but that's going to be in the next video.
Yeah,
maybe.
a whole video about necessary.
Part 2. Okay, well, anyway, let's get on to question 17, which is, what if I forget to file Form 709?
Well, there's usually no penalty if no tax was due, which is usually the case. But it can mess up your lifetime record. So back to the 709 as a record-keeping form, you want to file it as soon as you realize it.
Right, and the reason there's no penalty is that the calculation for the penalties is based on the amount due. So if there's no tax due, the penalty is 0 because the penalty is calculated on the basis of the amount due. Sometimes it doesn't depend on the amount due. They do have penalties. Now, I don't know. I don't think this applies to 709. They got penalties for not filing or for filing
even
tardy.
if you don't have anything due.
Yeah, right.
Really? Okay. Not for the 709, as we know, because we do sell a lot of prior year 709s.
Yeah, we do.
Yeah.
And so let's move on to question 18. How long should I keep copies of Form 709?
Well, that's an easy one to answer. It's forever.
There you go.
Or at least for the lifetime, for your lifetime, because they are part of the record, the record keeping for your estate. And your executor will need them to compute your estate tax.
Here's Maria again. It says, Maria made several large gifts over 20 years. When she passed, her executor used all the old 709s to verify how much exemption she had left. And now, question 19.
We're getting to the bottom of it.
I know. Can I make a charitable gift that also counts toward my annual exclusion?
Well, usually no. charitable gifts and annual exclusions are two different things.
Right. Gifts to qualified charities are fully deductible for gift tax purposes, and you don't use up any of the exclusion or lifetime exemption.
And that's important to note. But if you give to a charitable trust where someone gets income first and the charity later, that's a split gift interest. And part of that might be taxable. We should probably do a video on that.
Possibly, yeah. Adds a little bit of level of complication there.
Yeah, right. So, Ernie, what happens to the lifetime exemption exemption? I said it right the first time, and then tried to correct myself.
Yeah, there you go.
After 2025.
Great question. And one estate planners are watching very closely.
Under current law, the lifetime exemption is about $13.99 million in 2025.
You know, that's interesting. I'm wondering, we'll have to keep our eye on that January 1st date to see if that happens, because it looks like a pretty significant thing, a schedule dropping by half.
Yeah, right.
So yeah, we'll have to keep an eye on that and keep tuned into our video.
Yes,
anyway, that's our quick 20.
We hope you got some use out of at least one of those 20 tips, and we hope that it made the whole gift tax approach a little less intimidating.
And speaking of time, although I don't think either of us was, thanks for spending a few minutes with us reviewing these common gift tax issues.
And don't forget to like, subscribe, and follow our YouTube channel if you enjoy using technology to make your legal life easier.
And so, until next time, stay happy, safe, and healthy. Bye-bye.
Bye now.